Okay, thank you very much. So let's see. There you go. So we just talked a lot about punks. A lot of the people that have been analyzing these punks never bought one, never hold one. We're at the other extreme of that curve. We very actively touch these things on a daily basis. And so I hope that you can get some value from the lessons that we got from being a very active user of NFTs. So my name is Juan David. I'm the founder of Keyrock. Tell you a little bit about that later. But first of all, I wanted to start with a little bit of value just for you guys to understand better what's going on. And what I have here is a comparison of the volume that is happening in the NFT sales space compared to NFT collateralized lending. There are a couple of things to look at here that are very interesting. First of all, the market is not being growing very much, actually. So we are in a period of stagnation. Contrary to what you might believe when you're in a conference like this one, the data shows that this is not growing at the moment. That being said, there is another pattern that is very interesting, which is that even though the volume is not going up, the market is maturing as the amount of borrow against that collateral is becoming larger and larger. What that means is that there is actually an increase in trust into the value of the collateral. And that is what we're going to be trying to focus on today. So, quick about Keyrock. So we're an algorithmic trading firm, financial institution in digital assets. We actively trade all type of markets. And we decided a couple of years ago to get started in NFTs. And so we put together a small unit to research and understand what is happening in the NFT space. We've been doing this in stealth for the last 3 months, for the last 3 years. If you would hear about Keyrock, you would typically see us as a very large market maker, an HFT trader, a derivatives trader, and at the moment we are in the top 5 of spot accounts by volume in Binance. So you could imagine the size of the volume there. But in the meantime, we kept on exploring this, and we did that because we are a power user of DeFi, and we considered that the NFT markets were going to be a fundamental part of that in the future, and we wanted to understand how they operated. And so quick story here, but basically when we started to trade with NFTs, they were all about just exchange of value. You're correct? We have OpenSea, you would go there and you had different movements. You have the PFP movement, you had generative art movement, and all of the different movements. But the reality of it is that in step 2, which was what at the time was called GameFi, that's what really enabled the understanding and the exchange of NFTs. When an NFT is worth $100,000, the amount of times that it changes hand is actually not that much. When an NFT is very cheap, like a shoe on Steppen, all of a sudden you get a lot of rotation and volume, and you start having enough data that you actually have a real market. We, at the time, as a joke, decided to take a company position on Steppen on the first day when the project launched. So we put together a wallet, got a ton of shoes, and we had somebody walking around 7 hours a day collecting points on this thing at that time. It was a lot of fun. The market then kind of evolved again, and the whole GameFi narrative really stopped. But what took over was, and that was pushed by Blur, was professional tools for trading NFTs. So NFTs started to become more professional. All of a sudden we have tooling that enables people to be able to look at this market as a capital markets. And then, last but not least, we have the growth of the lending market. So people have these NFTs and they realize, I don't want to sell this thing, but I want to be able to get value from it. So I want to be able to get collateral and get dollars or get Ethereum or get Solana from it. And you have many different examples of NFT markets, Gondi as an example of them, NFTFi, and so on. So what happened here, which is very interesting, is that as the NFT space started to evolve, more and more entrepreneurs start to build financial primitives that are also useful for NFTs, right? We start having even the implementation of Uniswap with ranges that were NFTs, all the way to people trying to build derivatives and trying to build collateral-based systems where NFT can be used for AMMs, demonstrating the fact that the infrastructure was trying to catch up with the fact that NFTs can be used as collateral. From that, we started to get to work, and we decided that we were going to try to create liquidity into this market. But how do you create liquidity in a market that there is not a lot of volume. So what we realized is that we needed to be a lender into the market. So we started to connect with all of the largest holders of NFTs, among those the holders of the punks, and we started to give them liquidity. So we started to accept punks, fidenzas, squiggles in our OTC institutional desk, the same desk that we would be doing traditional market making. We realized, okay, we can actually work with protocols, smart contract base, and have a bilateral relationship with someone that wanted to borrow against their high value NFTs. And so we started to do that, and in a matter of 3 years, we did that for around 5,000 different collections or types of NFTs in general, a lot of them individual pieces. So it was a great experience, and it took us to the point that now, today, we are actually opening this as a service that we do with our partners, with the NFT protocols, and with companies like Sotheby's. We just underwrote the liquidity for a exclusive art piece that went on an auction at Sotheby's for around 900,000 euro. And we supported by first underwriting liquidity to showcase that you can actually buy the piece on an auction and then borrow capital against it if need be. Well, we basically call this exotic liquidity. What we believe is that the market, as tokenization continues to grow, there is going to be more and more need for exotic liquidity. So additional to traditional market making, which is very algorithmic, exotic liquidity requires a little bit more of a nuance. The way that we look at it is that the more liquid a market is, the more of a science it is. The more illiquid the market is, the more of our art it is. So these pieces are pieces of art, and trading them is an art as well. And so that's what we try to do. So where is this going? Our view here is actually pretty simple. We believe that the RWA narrative, both into financial instruments, but also just physical instruments, physical art, collectibles, are gonna start having a lot more liquidity as they get tokenized and they get traded on NFT format. There is also things that have never been traded because they have never been liquid that will start to be liquid, which is new asset classes that are unlocked by the NFT tokenization. And the last one is an expansion of financial primitives. So the more this continues to grow, we do believe that derivatives for NFTs and systems that enable to use them in a more sophisticated way will continue to grow and would enable, ultimately, NFT as an asset class that would have all of the same benefits and characteristics than any other asset class, including something like blue chip digital assets. That's it, what I have for today. So if you want to get in contact and understand better how we can help you with any of your needs in terms of building and pricing liquidity for NFTs, get in touch. And we're Keyrock. Thank you very much.